I analyze a market. In this video, I'm going to be just showing you how I approach any given market and take that as a template to go forward and actually use within my trading. So what I'm essentially trying to do first of all when I'm analyzing the market is to get an overall top-down view. So once I've got that view, then that helps me with where I want to actually pick off trades and from a directional point of view as well. Now what's quite interesting at the moment is I'm recording this on the 29th of January, Sunday the 29th of January. I'm actually away skiing this week that this video is going out to you, and so you can have a look. I don't know where the market's going next. This is just on TradingView charts. I have no future data past, well, this is Friday the 27th. This is on the S&P here. So what we're going to do is we're going to put some analysis together. Now, when it comes to analysis, again, though, I think people obsess. I mean, I spend a lot of time analyzing markets, but all I'm really looking for is some windows of opportunities. And out of 100 charts that I've analyzed, I only need to be right on a given percentage of those in order to, let's say I'm probably right on the analysis, probably more likely to be 60 to 70% of the time as far as analysis is concerned. But as I always say, there's one thing having the analysis, and there's another thing actually being able to trade that analysis profitably. Because even when you've got a piece of analysis, so let's say for argument's sake, I thought the S&P was going to come down. Okay, so you've got a bit of analysis, but you might get into a position, maybe the S&P spikes up a little bit, and so ultimately does come down, but you still get stopped out in the meantime. So that's what I'm saying. You can be right with your analysis 70% of the time, but it doesn't mean to say that you're going to have a win rate of 70% because of that. And also you might be that price might move in your direction for a while, then come back up as well. So there's all these sort of things that go on. Anyway, so what we're going to do is we're just going to look at this chart here. I've just got a daily chart here of the S&P. This and this is just like a continuous contract. It's just on Awanda here on their data, using their data feed, and so it's like a CFD chart basically, or more like looking like a futures chart. So there's no gap. You won't see lots of gaps on this, is what I'm saying, because it's more of a continuous chart outside of just short breaks from evening to evening. Anyway, so what I'm looking for are horizontal support, resistance, and any trend lines that there might be as well. So I'm going to start off by using the pen, and then I'm actually going to draw some trend lines on. So it's very basic. There's no rocket science behind this, but again, it's how you apply the information that's given to you when you look at a chart. So first and foremost, we want to just identify some levels so that we can, and I often call this, we're trying to find an operating window or operating windows where the price is and where the price may be going and heading towards. So first and foremost, I do want to pick out some highs and lows, but there's no point in me picking out this low here. That's very obvious. I don't need to put a horizontal line on that low right down there. So what's more interesting to me is, because where price is over here, I want to see, well, where's the most applicable horizontal line right now? So I don't want that one, but I could put a horizontal line going all the way through here. So we're getting plenty of previous tests through there, plenty of price action through a level like that. And so that would be a nice level around about 3,800 to have on my charts. We can also see there's another level right here, slicing through, well enough, 3,900. That's a nice level there as well. So what are we already, actually, I won't go any further just yet, or I'll keep going, should I say, and then we'll come to it. So then we've got this other level, probably around about here, which is sort of tying up with where price has pretty much just been to, as of recording this on Sunday the 29th, on Friday the 27th, the S&P got very close to 4100. Now, of course, by the time you're watching this, price is going to be wherever it's going to be, because that's going to be a week and a half into the future from where I'm recording this. But that's not a bad, of course, level there. However, we do have these intermediate spikes, should we say, here as well, which is around about 4140. Okay, so we got some levels there. Now, I could keep going and putting more and more levels on, of course, but for now, and I'm going to put these lines on in a minute, that would probably be enough, because what this chart is currently telling me, and there's more that it's going to tell me in a moment, is that we have a current operating window, and that's this window here. This is the most important price levels in recent history, and we're trading at the upper boundaries of this current operating window. So if price was to roll back over, then I know the operating window that we're trading within, and we've got this next level down here, as we know, around that 3900 area. If price was to come down to there and start to break that, then we've got a new operating window down here, which if we broke that, then it's more likely that we end up coming down to 3800. Okay, so we've got some nice horizontal levels on there, and going all the way up to sort of 4140 or so, and then again at 4200 we got this prior high here, and price action through here. So 4200. So there's just lots of levels on the S&P because of the amount of price action we've had. And then of course we have 4300, which goes back nicely as well. It's just basically every 100 points, it seems, on the S&P there's a level, so which does make our job quite easy. Now let me take the pen off for a moment, and let's put at least a couple of these levels on right now. So, and in fact there's one level that I haven't actually put on, but we're going to put it on now. Okay, so what I can now do, I've got a trend line on here as well, so I can just drag this down. So we're looking at this level down here around the 3900 area, and we've got that next level down here around the 3800 area. So these are our operating windows here, and then we've got this upside potential levels as well. Oh, one thing I've missed out was this other one, which we've practically come into. If I put it around there, okay. So as I've said, we're in the upper reaches of this operating window right here, as I'm recording this on Sunday the 29th of January. So is this helping us at all? No. Well, it is. It's giving us some clear levels. The thing is, I don't mind putting these levels on, but then I take them off, because there's no point in me just cluttering up my charts with like levels after levels, or I'll change these into dotted lines so they're not as prominent when I'm on the chart. Again, the lower levels, which are the lower boundaries, do I need that at the moment? Because we can see where the current operating windows are. So I don't actually need this one down here, so I can take that one off. The current one is right there, so that's important. Then we've got this 4140 or so area, and then 4200 is going to be a key level as well. Now let's actually look at the chart in a slightly different way here. Now I could put a trend line if I bring my trend line tool on, and if I just put a trend line, oops, you gonna let me put it on? There we go. So we might have a bit of a trend line building under price action thus far off those lows. I haven't quite drawn that on properly. Let's see if I can. It's not wanting me. Get rid of that. There we go. Let's see if I can. Yeah, it's about right there. No, it still doesn't want. There we go. That's a bit better. Right. Okay. So we've got this trend line on down here as well, below price. So we've got this historical trend line, which most people are aware of, dating back to January of 2022, the highs of 2022, which has been a beautiful, clear trend line. So let's get a read of that. So if we read that, we can see plenty of tests of that trend line. Then we came up to it back in early December, was repelled again, then came through for what I would call a false break. So it came back up for it, tried to break out, became a false break, sold off. Now, I think what was important was that price then, as we came into January, came back up for it again. And that, to me, was a sign that price was likely, once it started coming up to that trend line, it was likely this time, after the rejection and failed breakout last time, that it would end up breaking through, which it subsequently did. So what's interesting at the moment is, yes, it's broken through. I'm not even going to go there. I'm going into the week ahead for me at the moment, where we've got a huge week of news. So who knows what the news is going to do to the S&P. FOMC, we've got ISM figures coming out. It's just, we've got non-farm payrolls. It's just a relentless release of data in the week ahead. You have the privilege of already knowing all of that outcome. So do I care about that? No. It's just a case of we analyze the market. So at the moment, what I can take from this is we do have currently a trend line breakout, and price has already broken out back here, retested it and gone higher. So at this stage in the game, no matter what happens, if it pulls back a bit, there's an upside bias here. There's an overall upside bias. That's how I'd be looking at this. Even if it consolidates or pulls back a little bit from here, it's still on a trend line breakout here. Still, that's a confirmed breakout that we now have. Now, we may be into another technical level here, but that's where we're at. So all the time we are above this trend line, then we are in a good place for potentially more upside. And that would be, and I'm just looking at this on a daily chart. I'm not even going to bother going on this video going through other time frames, but this is the sort of analysis that I would do. I would of course also recognize any chart patterns that may be there. There's an argument there could be a bit of a sort of a cup and handle pattern going on here as well. Patterns within patterns, you do get that happen quite a bit. So is there a potential for upside? Yes. What would change my view? And this is what's nice about technical analysis, because we have to be like gorillas. We have to be willing to fight for either side. And so generally speaking, until proven wrong, the balance is tilted to the upside. Since price made its low back in October, it's made a high here, it's pulled back, it's then made a higher high over here. We're still it's still made a higher low here than over here, and so generally speaking, it's still okay at this point. Yes, it's got lots of levels which it could get repelled from, but this mighty trend line suggests, and the fact that the 200, the S&P, I'm not putting my moving averages on, has gotten above its 200-day moving average properly for the first time in a long time. So there's some positive signs here. Even if it was to pull back and consolidate and maybe pull back even to this lower trend line down here, the general, generally speaking, there's a positive bias here by just looking at this chart. Okay, so what would change that? Well, we've got this lower trend line here. So of course, initially a break of this rising trend line would be a confirmation that maybe all is not well. But realistically, it's going to need to get below that and back down to this last low down here. As I've already said, if we breach this low back down here, then we're into this operating window, which should see it back at 3,800 in technical analysis. And then if we breach that, then it opens up a whole lot of space below to the next levels down there. So simple stuff when it comes, and even technical analysis like putting trend lines on and horizontal lines is there's still an element of subjectivity. I could put a levels on up here, which someone else might put slightly differently. It doesn't matter. It's you're formulating a piece of analysis in order to give you a bias in the market. Now, whether your bias is to the upside or your bias is to the downside, overall I find it doesn't really matter. Whether you're right on that particular piece of analysis. Like I said, if you follow your analysis enough of the time, you will find that you only need to then be right a given amount of time, and then you're making money. So don't focus worry too much about having to be absolutely right. But if you at least, this gives you a picture of a market. Then you take that picture and you apply your entry methods, the tools that you use, your strategies in the direction of the analysis. Whether the analysis is, oh no, it's topping out here, Charlie, and it's going to roll over. Fine, use that as potentially a shorting opportunity at some point, or likewise you're looking for a pullback to get long. Whatever your analysis is, but we start off here with a blank chart and then we progress it from there across. I don't normally start off with daily charts. We normally start off higher time frames and then come down, but in this instance that's what we've done. Hopefully that's given you some food for thought for this week, and a little bit longer than usual videos, and I'll be back in touch in a few days.